All right, so what are the topics? It always bugged me in class when you get to the end of the class and there's a chapter we never got to or whatever. It's like, what did we cover? So let's hit some of these and what I think you need to know if you're not a finance major or if you are a finance major. Some of these are more accounting topics, more management topics. But remember, early in the semester, we talked about working capital, the working capital requirement, managing things like accounts receivable, accounts payable, inventories. So that's a big deal. With working capital, you're trying to reduce the working capital assets. So collect your receivables faster, manage your inventories better. That's a big part of a business. Your liabilities, you want to manage your vendors as well as you possibly can. So it gets back to that cash conversion cycle. What you're trying to do is shorten that as much as you possibly can. So I had some projects at USA where we worked on that. The big thing when I was there was how people paid us. When I started, almost everybody paid us with check. And then they started doing bill pay, which you saw that example in the application number 4, if y'all remember that, converting that to electronic. Then people started doing credit cards, and then y'all know what ACH is? Automatic clearinghouse. Y'all do that? Do y'all write checks? How many of y'all here write checks regularly? Every once in a while, but not really. Any of y'all in here never write checks? Few of y'all, okay? Do y'all use Zelle and Venmo or whatever it is? Yeah, Zelle to me is a pretty interesting one. And credit cards. So the actual cash itself, I've got cash in my wallet. I haven't spent, it just sits there like $50. I never buy anything with cash, but I have it just in case the credit card machine is broken or something. Debit cards, I use debit cards. I don't really understand why debit cards would work well. I prefer credit cards. But so that was a project. Now, when you talk about letting your customers use a credit card, you might move up the accounts receivable or move it back. Depends on when they charge it, but then it's going to cost you money because you're going to pay this exchange fee, 1-2%. So it gets pretty expensive. So you got to make all those decisions. At USA, we were going through that transition of so much coming in as checks and everything converting these other payments. ACH was by far that's what they liked the best because it's really cheap, pennies per transaction. You don't have to pay these huge fees. It's all electronic. It all went by computer, very, very low error rates, almost no error rates whatsoever. Worked really, really well. But getting your customers to do ACH is part of the challenge. Your challenge as a customer, if you do ACH, is if you change your bank account, now you got to reset all that up. You've all gone through that before. Don't you hate it when your credit card company has to issue a new credit card? And now you got to go out and find everybody that's automated on your credit card. So, I prefer ACH myself, but credit cards are nice because you get cash back or whatever. So that brings in this concept of treasury management. So treasury management is a finance or accounting function. I've seen both accountants. I think there's probably more accountants in treasury management. There is a designation, Treasury Management Association. They have an exam. So Certified Treasury Professional. They keep changing their title. When I took it, it was the CCM, Certified Cash Manager. They said that doesn't sound fancy enough. So now it's Certified Treasury Professional. It's not even Treasury Management. So CTP, I thought it was a fairly easy exam. My boss started studying for it like 2 days before and he passed it. And so I was talking about what an easy exam it was because I'd finished my CPA and all these other things. And I almost said how easy an exam is. And one of the cash managers at USA was like, man, that exam, it was so hard, wasn't it? It's like, yeah, it was pretty tough. So I didn't think it was very difficult at all. It's only a 1-part exam. It does cover stuff we covered in this class, like the turnovers, the receivable turnovers, all those kind of stuff. So my philosophy on certifications. So for your accounting major, you're going to get a CPA. No question. Any doubt on that? Right, Patrick? I'm sorry. Yeah. Do you think so? I mean, right out of school? I got mine in November after I graduated in May get it out of the way as fast as possible. I didn't think the CPA was that difficult an exam. It was a memorization exam, and I'm really good at memorizing, so I didn't think it was too bad. I made the same mistake on that one. My boss called. She took it the same time I did. She calls and goes, Ron, how'd you do? I said, I'm pretty sure I passed. I thought it was pretty good. And she was like, oh, she was so mad at me. It's like, sorry. But so you get your CPA. Well, I worked with treasury management at USAA, so I got the treasury management certification. I worked in the life insurance company, so I got the life insurance designation. I worked with the property and casualty, so I got the CLU. You know, I kind of like, if I'm in a department, I want to have some proof I'm an expert in that area. So I took the exam. I encourage you to do that. So when I was looking for a life insurance company, they have something called the FLMI, from the Fellow Life Management Institution, LOMA. It's a 10-part exam. It's not real difficult. It's got some parts that are more difficult than others. It's a multiple choice. So yeah, you can. So when you get into your first job, start thinking about those kind of things. What designations can I get? If you work for a bank, they have the I forget what it's called now, but they have their designations. Every industry has a trade group that has a designation. I would say get it as fast as you can. You know, get the CPA out of the way first, and then start looking at these designations. If you move to another area, get that. So for me, I started going into finance board. So there is a CCP. I do not have the CCP, but that's Certified Financial Planner. I'm not a financial planner, but that is a designation you can get. I did Certified Financial Analyst, the CFA. This is the hardest exam I ever did. So I thought the CPA was much easier than the CFAs. So I've done them both. I thought this was a much more challenging exam, especially part 2 of that exam, really tough. But then, Lisa, I've had actuary friends take the CFA and they talk about how easy it was. Why? Because they do the CFA exams, which are really, really hard. So, you got the CPA, the CFA, then you got the actuarial exams. And I don't know what's harder than the actuarial exams, but they're really out there. So I don't know, do you have certifications for cybersecurity?
Yeah,
what's it called?
One I took was CompTIA Security Plus, but the industry standard is CIS.
CIS. Yeah. And there's others out there. There's the ARM. So Associate Risk Management designation. There's plenty of them out there. There's a new one out there that's for modeling, which I had a few people take that I think might be an actually pretty good designation to get if you're a finance major. So which one do you do and when do you do your master's and all that? If you want advice on that, especially accounting, actuary, and finance, part of it you want to wait and see, especially on the master's. I know some of you want to do a master's right after school. I actually think you're better off in finance and accounting waiting 2 or 3 years to figure out where your expertise is going to be. That way you can really gear that master's to what you're going to do. So my master's was a little bit of a waste of time because most of the stuff I was studying I already had before. But when you do graduate work, it's a lot of busy work, papers, projects. But I knew I was in financial services. I knew it was like insurance and banking. So I made sure all my projects were about insurance and banking. So at least I got that out of it. If I had just come right out of school and done that, it would have been kind of a waste. But designations are good because they're pretty intense. The Certified Financial Planner or CFA, it's really good material. It's very helpful. I learned a lot doing the CFA exam that I still use quite frequently today. There was stuff on banking I learned in the CFA exam, went back to USAA, met with their bankers, and they'd never heard of it before. So I say, no, cool, look what you can do. And I was teaching them, banking. And, so just from the exam, you can learn a lot of stuff off this exam. USAA moved $16 billion in assets because I took this exam. I came back, with all these wonderful ideas. And so I got them to radically change the company. Entirely textbook stuff. I didn't know what I was doing, but boy, I was very confident. So figure out what you're going to do, and then get some proof that you have it. So I got my treasury management because I was working in treasury management. got that out of the way, got it on my designation. I didn't learn a whole lot taking the exam because it was stuff I'd seen before. That's why my boss passed it with no trouble, because he'd seen it all before. But what does treasury management do? They manage the cash account. And, why do you hold cash? So you have transactions, and this is the thing we did at USAA is they had a forecast, a daily cash forecast, a weekly, and a monthly. And so they would want to know, hey, when are we going to need to pay out 50 million bucks? And they started this thing that if you needed 50 million bucks and you didn't tell them, they were going to charge you a fine. So if I walked in and say, hey, I need to send $50 million, I was like, hey, you're supposed to tell us that yesterday. You can't walk in here at 2 o'clock in the afternoon and tell us you need 50 million bucks. They'd give it to me, but then they'd charge my department several $1,000s. So they're real strict. Let us know in advance when money's showing up and when money's going out the door. So I'd have to tell them, this subsidiary is going to pay a $100 million dividend on next Tuesday, so that they would know that's in their structure. That way, if they know 100 million is coming out and someone else needs 75 million, they don't have to have wasted money just sitting there. So they're trying to manage that flow. They're trying to keep idle cash from just sitting in the bank. You can do it for precautionary needs. So you might hold extra cash because you have something big you think might be coming up and you don't know exactly what it is. At USAA, they do something called subscriber savings account, which is several $100 million that they send out. Say in January, they used to send it out in checks. In fact, they used to have a bunch of trucks on their campus, these 18-wheeler trucks that were going to house all of these checks that they were going to take to the postal service and mail out. They don't do that anymore. Everything's electronic now. But they don't know when all those checks are going to clear. So how much cash do you hold? You're sending out several $100 million. Some will clear tomorrow. Some will clear in 6 weeks. How do you hold cash? And then it might be speculative. This is what Apple and Google and Microsoft are doing. They're holding, 100 to 150 billion dollars in cash for who knows what reason. Supposedly they're going to buy some entities sometime. Who knows what they'll actually buy? Maybe people talk about Apple buying Netflix. That would be interesting. They could probably buy Netflix with what they have. That's the speculative motive. I don't know what Microsoft and Google really are planning to do with their cash. It's just sitting there. They could give it back to their owners, but they decided to just let it sit there. If you don't know what to do with it, send it back to your stockholders. So you don't want to hold cash. So what do you do with the excess? You can put it in short-term investments. That's what Apple does. Apple buys these 1 and 2 year bonds. So yeah, they're going to make 1% instead of 0.3%. How many of you are investing in Apple stock because they're really doing a good job of managing their cash balances? Probably not. That's not the reason you buy them. So it's kind of wasted money. You can buy all these other investments, but right now, none of these are paying really, really good returns. It's getting better because the Fed's raising rates, but there's not much you can do here. So most of us as individual investors, we hold cash for kind of opportunistic. I have a bunch of cash right now because my pension plan just lump sums, and I decided just to let it sit there for a while and see if this market crashes. We'll see if it does or not. I'm kind of hoping it does, so I can put that money to use, but we'll see. So now, right now, sitting holding cash and just not doing much. If you have a cash deficit, what do? So USAA could borrow money. They had bank lines, they had debt facilities, $3 to $5 billion in debt facilities. They could go out and borrow money. Those lines can be committed. If you have a committed line, then you might pay 0.1% to the bank, even though you're not borrowing money, just for the right to come borrow from them. So that's committed. And then when you want to borrow money, they have to loan to you because you've been paying them a fee. That's a committed line. And when you borrow from them, you pay normal interest. An uncommitted line is a bank says, yeah, if we feel like it, we'll loan you money when you ask. That's still important because you got to get all the paperwork set up, all the approvals set up. So when you come and ask money and say, hey, we want to borrow 50 million, and then you look and see if they have the money to give to you, at least everything's set up. This stuff, I mean, you should see what at USAA, you don't just call up Goldman Sachs and say, hey, we want to do a committed line of credit with you. It is USAA is a major dog and pony show every year. 10 to 20 banks come in and they do this massive presentation and they're begging banks to give them a committed line of credits because banks hate committed lines of credits. They require them a whole lot of capital. They don't make much money off of them. So what the banks say is, okay, USAA, you want a committed line of credit? What else are you going to give me? And sometimes they call me and say, hey, Ron, you have anything to give this bank? Can you like send some of your trades over to them? I say, okay, I'll send a few trades over. So that'll make them happy. So, you say, okay, well, what if we send them $1 billion in trades the next year? You say, okay, yeah, they say that's enough. Say, okay, $1 billion trades, that's not that much. You kind of have to pamper them a little bit because they don't want to do this because they really don't make money off of this. So they're asking for other services. Commercial paper, USA has a commercial paper program where they can borrow money in the short-term market. You can do collateralized loans. So I don't know if you've ever heard of the term securities lending. That's a huge, huge business that goes on. It's just trillions of dollars every night where people are saying, hey, I've got some treasuries. I'll give you my treasuries. You give me some cash. And then now you have cash, but when my treasuries back, I'll give you the cash. You give me my treasuries back. So it's a massive, massive business. And then factoring, that's when people have accounts receivable, but they don't really want them. So they sell their accounts receivable to somebody else. What firms do factoring? Well, AutoZone, if y'all listen to that business breakdown, AutoZone is they have a lot of payables to their vendors, and their vendors take AutoZone's receivables and factor them. And they like to do that because AutoZone's a really good credit. So this is the managing that process. So if you want to get into treasury management, that can be your entire career. I would not have liked it as a career because I didn't think it was, I just didn't get excited about it enough about it. There's too much just day to day. It's the kind of career where 40 days are really boring. And then the 41st day is horrible. The whole world's coming apart. So the kind of thing, everything works well. And when it's not working well, the whole company's about to go under because treasury management made some mistake or somebody else did. So it's one of those boring for a while and then it's this major crisis. But I worked with this for a while. I remember when I started in finance, my boss said, you're doing a presentation next Tuesday on treasury management. And I said, what's treasury management? He said, well, you better figure it out really fast because you're presenting to all USA's treasury management on how to do treasury management better. So, okay, I better go find out what treasury management is. So that was kind of scary. And USA just hired the top banker from the local banks as their cash manager. And so I was like, I'm going to present to this guy who's been doing this for 35 years. Managing receivables, you just try to collect them faster if you can. You may give them some incentive. Say, if you pay early, we'll give you a discount. You might have aging schedules. What do you do if someone's late? Are you going to go after them? Some companies don't. You pay 10 days late or say, yeah, that's fine. They do nothing about it. So what are you going to do? You're going to pay them late. Why not? I discovered with one of our banks, Deutsche Bank, we wrote into the contract that if there was ever an error on the bill, we didn't have to pay them until they corrected the error. And they always had errors on the bill. So I was always not paying them. There was like 9 months I didn't pay them. And I was perfectly fine not paying them because the contract said that. Sometimes the error is like for $3. And I called Dave, go, Dave, you still have this at 27 cents. It's supposed to be 26 cents. He would say 6 cuss words, not at me. He'd call his department, can y'all please fix this? They'd fix it. And the next bill had another error in it. It's just banks are a mess in their systems. I'm not going to talk about lock boxes. I don't think they're really an issue anymore. So some of the stuff you cover in treasury management, because of truncation, have y'all heard of truncation? I don't know if y'all don't write checks. Check truncation, you go to HEB, you hand them a check. What they used to do in the old timey days when I was working is they would take all those checks, bundle them together, drive them to their bank. Their bank would take all of them and put them on a plane and fly them around the country. Ridiculous waste of money and time. It was amazing. Every night there was millions of checks flying over our heads around the country. Now what do? They convert those checks into an ACH and they send it electronically to the bank. So your grandparents probably floated checks. You can ask them about that. They would go to HEB when they had no money in their checking account and write a $100 check. And then they'd hope before the check cleared, they could get the $100 in there, and they might have 2 or 3 days to get the $100 in there. You can't do that anymore because it might clear same day in some cases, in 10 minutes, who knows. So check truncation is a brand new thing that didn't exist. So I'm not talking about outsourcing and deposit flow. I think most of this section has actually moved. Now, automated clearinghouse is still a thing where you can, if you're doing any kind of debit to your account, they're using automated clearinghouse. It's usually a batch process. So there's usually a 1-day delay with automated clearinghouses. But it's still pretty fast and very, very efficient. I like ACH with my charity because it doesn't cost me anything. I hate PayPal because PayPal costs us thousands of dollars. We've paid, I don't know, $7,000, $8,000 in PayPal fees. Anytime I have a donor that says, hey, we want to send you 10,000, I'm like, please send me a check. Don't go through PayPal because PayPal is going to take way too much of our money. I linked you this article. You probably can't get to it, but this global transferring money is a huge deal. Western Union is still big into this. Western Union kind of has a bad reputation because they were offered to buy the telephone from Alexander Bell, and they said, why would we want the telephone? That technology is going nowhere. So it sounds like a really stupid company, but actually it's one of the oldest companies. I mean, it still exists today. They used to do telegraph. And they're in the global transferring of money, which is huge. Getting money around the world is huge. I know in Costa Rica, where our charity is, we're in the middle of the jungle. They just got electricity just a few years ago, but they all have cell phones, which I don't understand. I remember, I wish I had a picture. I may have told you all this before, but there's an indigenous woman on a pony, and the indigenous garb is so beautiful on this pony, and the background was like jungle. And I wanted a picture because she had her cell phone in her hand, texting someone. I thought, just such a perfect picture of today. She went home to a home that had no electricity, so it was really hard for them to even charge their phones. But they go to our restaurant. We build a restaurant. They go to our restaurant, and we'll do all these transfers for them. They used to have to hike 16 hours to the city to pay their bills. Now they can just hike 4 hours to our restaurant, and we'll pay the bills for them using electronic. So this is huge. It's changing the world. A lot of communities, this is really a radical thing. And Western Union is a big part of that, and other places, other businesses. And to me, Zelle and Venmo and all these others, they're kind of interesting. I'm not sure exactly how they make money, if it's from the banks, if they're getting fees from the banks. Any of y'all know these businesses, how they work?
Like when you transfer, like some of them, they ask like instant fee.
Yeah, an instant fee, but if you don't do the instant,
Yeah.
my guess is they're probably making money off the banks. The bank's paying them some fee because it's cheaper for the banks to do that than other things, but I don't know. I don't know if I can actually look at their financials or not, but I love it. I prefer Zelle over PayPal any day. It's very easy to do. I mean, I pay the people in Costa Rica through Zelle. It's just so much easier to send them money down there. Inventory management, we won't get into that, but some of y'all are management majors. Have y'all done this yet? Economic order quantity, is that a class? Who's a management major in here? So if you take a management class, you'll have these, your goal is you want stuff to show up right when you need it. So it's not just sitting there collecting dust and taking up space, but you don't want it to show up 2 days too late because then you lose sales because you don't have inventory. So there's whole models on how to manage that process, and firms are getting much better at that. I used to cover the formulas in this class, but I think it's kind of ridiculous because that's not what this class is. So if you need that, you'll have it in another class. So definitely this is a part of finance and accounting, is how do you manage inventories, receivables, cash, an important part of a business. It tends to be a part of business that most people don't notice until something breaks, and then it looks like the end of the world. Inflation, interest rates, and currencies. You better better be paying attention to your money in banking because this is really, really critically important stuff. Well, I wish I were an economist and I could teach money in banking. It'd be a really fun class to teach right now. I was USA's chief economist for several years because their economists quit and no one else wanted to do it. So I got to do it and I was like, I only have like 18 hours economics, but it was kind of cool. I enjoyed it. It's a lot of fun. In fact, I was on a Zoom with one of my former students who has a job at a new company now, and their CEO was the previous CFO of USAA. And so they asked me to come talk to their company, and she introduced me as USA's chief economist. I was like, wow, that's pretty cool. That's the way they remember me because I really had no qualifications for that job. But this is, now if you're a finance major, you're going to have to become an immature economist. You have no choice, right? Dante, you no choice. If you're looking at companies, you have to understand how does the economy affect these. And there you just need to read. Here's one of my favorites is Hoisington. Lacey Hunt at Hoisington. They're up in Austin. Really, really good management firm. But he publishes a quarterly outlook. And boy, I love what he writes. Really, really excellent, excellent stuff. I highly recommend you read his stuff. What I love about it first, it's very understandable. So he's not writing this to economists, he's writing it to their investors. He's a very good writer, but the really thing I love the most is he doesn't just give the normal stuff. He goes out and finds really, really interesting stuff. So he's talking about the Fed, interest rates, inflation, the economy, all that kind of stuff that's really, really interesting, but he has such great insights. I think if you get in the habit of reading his stuff, you're going to find some charts to show your boss that no one else is going to show them. That's going to be really, really interesting. And he has some really good charts. And a lot of them you can recreate yourself. You could obviously just copy them. My biggest complaint with him is his paragraphs are way too long. But other than that, smart guy. He's come and spoken before. I've met him a couple of times. He's spoken at USAA before. Hoisington himself is the head of the company. I did a conference where he and I presented together, or one after the other. Hoisington always talks about Lacey Hunt, the guy who wrote this, as being the real key to the company, but Hoisington's a pretty smart guy himself. So interesting firm. They're a firm that does nothing but buy treasuries, and they bet on one thing, whether interest rates are rising or falling. So if your boss is interested in what's going on with inflation or interest rates or US dollar, that's all they care about. And he's a really good economist, so that's a really good source. There are obviously a lot of other really good sources out there. Go find them and read about them. Get some history of interest rates. Pretty easy to get the history of interest rates. You just type H15 and the Federal Reserve comes up. There's historical data. So you can bring in interest rates. Just ridiculous amount of data and a click. And you now have interest rates back to 1962. I mean, just ridiculous. You can have that kind of data. So 1962, the 10-year was at 4%. Today, it's getting back up to 3%. But easy to get interest rates. What I like to do, let's see if we can do this real quick. So if I were a finance major or accounting major, management major or cybersecurity major or actuary, what would I want to know? So let's sort it. So we get those NAs out of the way. So for some reason, the Federal Reserve thinks we want holidays. Oh, I didn't get them all, so let me do it again. Where's the 10-year? Right there, column J. So let me do it by column J. So if anyone from the Fed is watching this video, you really need to stop doing that, because I don't know anyone that needs. But if you need to know every bond holiday the last 70 years, you can figure it out from their site. So what would you want to know? So the most important ones here you have the 1-year treasury. That's pretty important. Here you have the 2-year treasury. That's pretty important. And the 10-year. So let's look at those three. If we graph them, you certainly see the 70s. See where interest rates have generally been falling really for a very, very, very long time. So 70s and 80s, interest rates really, really high. You see short-term rates essentially went to zero. And now you're seeing a little bit of rise. People are freaking out about that little bump right there. We've been above that almost the entire time. So where interest rates today, they're fairly low, but they're rising, but they're still not rising back to historical levels. What else might you do? Well, I'd be really interested in the spread. The term spread. What's the term spread? Well, you take the 10-year minus the 2, or well, I'm going to do 1 year. You want to do it versus a 2-year, but minus the 1 year. That average spread has been 1%. Where is it today? It's 0.79%. What's the minimum? Minimum is -3%. What was going on with a -3%? Why are short-term rates higher than long-term rates? What's the bond market telling you? What's going to crash? Someone said it. Recession, yes. So what's that called? Inverted yield curve. An inverted yield curve, when short-term rates are higher, what's the market saying? The Fed has raised rates. They're going to cause a recession. So even though the Fed's raising rates, the long rates are not rising. Why? Because they think the Fed's going to cause a recession. What's the Fed going to do when the recession starts? They're going to cut rates. So the long end just sits there. So we don't care what the Fed's doing because they're going to overdo it. Now, everybody's worried about inverted yield curve today. Do we have it in your inverted yield curve today? Not even close. But the official is the 10-year minus the 2-year. We just don't have as much data there. This thing. There, the average is 92. What do you notice there? The yield curve's pretty flat. It's not inverted. It's pretty flat. It hasn't gone negative except for just like barely, really flat. So people were freaking out back here because the yield curve was getting really flat, even slightly inverted. We've never had a recession without an inverted yield curve. We've had a few inverted yield curves where it didn't cause a recession. Usually in a recession, so if you go back to 2007, which is a good example, before the 2008 recession, it doesn't just invert a little bit, it inverts quite a bit. So you see it's inverting like 15, 20 bips. So when people see the 10 years 1 basis points below the 2 years and they're like freaking out, you need more than that. So it's got to invert more than that. It's not inverting anywhere close to that yet. So the average is 92 basis points. Today we're at 19. So the yield curve today is flat. I would even call this flat. I don't call -5 to be inverted. So is the bond market telling us a recession is coming? Not really yet. It isn't. And part of that is because the 10-year rate has been rising so much. So the 10-year rate's up a bunch. Why? Because the market really is worried about inflation. If you're worried about inflation, long rates are going to rise. All right. You don't worry about inflation when you have a recession, because in recession, people stop buying stuff and prices fall. But if I were a finance, accounting, management major, I would be looking at the yield curve, and I would have this history on my machine. I'd be updating every day, just looking at it. You want to be the first person in the office to say, hey, you notice the yield curve just went negative, just inverted. Don't you want to be the first one to say that? All right. You want to be ahead of the curve. So monitor this kind of stuff, what's going on. Know where the 10-year, if you're a finance major, you always know where the 10-year yield is. I think today it dropped a little bit. So the 10-year is at 296. It was getting really close to 3%. We actually went above 3% slightly yesterday. We went up to 3.002%. We hit 3% and just kind of bounced back. So there it is, just barely hit 3%. I don't even know where in there, it doesn't even show you, but just barely hit 3%. Is 3% an important number? Is 3% more important than 3.01% or 2.99%? Well, psychologically, it seems to be, but you need to know that. Don't walk into an interview and you don't know what a current 10-year treasury is. So they were at 296. So rates have risen a little bit. But have a historical perspective on these kind of things. Same thing with inflation, same things with the economy, GDP. Know these numbers. It's so easy to dump these numbers in. What I usually do is say, jobs added, Excel, Fred. I type that. Fred is the Federal Reserve. I don't know what the rest of it is, but it's the St. Louis Fed. They're the ones with all the data. If you click on it, it's just amazing what they do. Well, there we go. They bring up the chart. There's the chart. This is all jobs, but that's not what we want. What we want is the change. I don't know which change I want. Let's try that one. Can you see the COVID when you do the change? Does it kind of stand out? I've seen this in a lot of charts. COVID by itself has messed up a lot of graphs, but you can download it to Excel. And just like that, you have jobs added. There's another one. You should do the history on it and look at it. What is a big number? What is a small number? So the median is 160,000 jobs. But the other thing you'd want to do is maybe look at a 10-year average, rolling average. There you can see COVID again. There you can see the 2008 crisis. We've lived through two things that we've never seen before in history, just in the last 15 years or so. It's just pretty amazing. So yeah, this is jobs added. So you can see that 160 is kind of the median, I guess. This is a 10-year rolling. You can see fewer jobs back here. I don't know what year we started in. So this is kind of coming out of the Great Depression. Then you have the 2008 crisis. But have some concept. So if the average is around 150 and the Fed reports that 750,000 jobs were added, and you go to work, what are you going to say? Your boss says, hey, did you see the jobs report? What do you say? You say, my word, yeah, 750. That's crazy. That's a really high month. If you don't know 750 is a really high month, you know, you're in trouble because your boss is expecting you to react to that. Is 750 a good month? Yeah, that's an crazy good month. Then you go back to 2020. Is negative 20 million a big number? Yeah, that's a pretty big number. We've never seen anything like that before. So on the economic side, I would find about 15, 20 ratios that are really, really critical, like the unemployment rate, like jobs added, like inflation, like interest rates, like the GDP, like productivity, like industrial production. I would get the entire history, look at it, know what the average is, maybe put it on a 3x5 card and carry it with you so you know. As I say for students, you need to know when to gasp, when the number is really crazy. And if you don't know the history, then you can't guess that. Another thing on the 10-year treasury, I think we talked about before, is its change. So the average change in the 10-year treasury is, oops. Standard deviation, excuse me, the average is 0, but standard deviation is 6.5 basis points. So one sigma event is 6.5 basis points. Yesterday, interest rates rose 4 basis points. So was that a big day or not? Not a massively big day, but then you go back to 2020, again, a crazy year. In March of 2020, and you saw a 29 basis points rise in interest rate. Was that a big day? That was a massive day. Amazing. You saw 16 basis points fall in interest rates. That's a massive day for interest rates. 18 basis points drop. 17 basis points drop. I remember I posted on Facebook, the bond market is telling us something. These are crazy, crazy numbers. You just don't see interest rates drop that much when interest rates are only at 1%. That's just crazy, crazy, crazy numbers. So there's obviously something going on with the market when you see those type of moves in interest rates. But if you don't know that 6.5 is a 1 standard deviation event, you don't know that 20 is a massive event. So when it comes to economics, build some data, build a dashboard, build some stuff that you're monitoring at least once a week. Bring it in automated. You can automate these things using Python pretty easily. All this stuff is available if you're a good Python writer, or if you're not a good Python writer, just Google Python employment jobs report or something. There's probably someone who's already written the code. You can just bring it in and just steal it from them, and you have this data. So learn this stuff. We're not going to get into yield curve, but make sure in your money and banking class, you learn those theories about the yield curve. Why is it upward sloping? Why is it flat? Why is it downward sloping? What are the theories? So we're not going to cover that here because we're just running out of time. But there's the theories, and they'll go through that. I wish there's an economist that teaches in our EMBA. I wish he's retiring, but I wish he wasn't retiring and he would teach money and banking because he's just an exceptional economist. I'll put this on video just in case he's watching, but really sharp guy. He works here at the local Fed and just has a really good reputation around the country. Inflation, you definitely need to understand inflation. It's a big issue right now. There's an article I think I put out there on Blackboard. There's more than one inflation rate. There's CPI, there's PPI, there's the deflator that the Federal Reserve uses. They're all different, and they're all different because there's no obvious way to calculate inflation. A good example is PCs, personal computers. I bought a PC in 1988, I think, from, what's the name of the store, the mall store that doesn't exist anymore? Can't remember the name of it, but I bought a PC, a Tandy, we sold Tandies. It cost me like $2,500, no hard drive. I had a low DOS, and I don't even know what DOS is. I had a low DOS, and after low DOS, then I had to load whatever program I was loading. So if I want to do Excel, I had to put like 18 disks in and load all those. And then finally, after about 30 minutes, I could start doing Excel. I had to do that every single time I turned the PC on. Load all of that. That PC today would cost how much? How much would you pay for that PC? But the only use for that PC would be in a museum somewhere. Have y'all seen the videos of parents showing their kids, these old machines are like, well, where do we touch this? They're touching the screen. It's like, yeah, that's not going to do it. And the screen's like that deep. How do you do inflation off of that? The inflation's negative, but you can't cover that because the quality, that's worth zero today. And it was $2,500. And I don't mean $2,500 in today's dollars. I actually paid $2,500 in 1988 for that PC. So how do you adjust for quality? Cars are higher quality. Phones, how do you even do phone? So how do you do this? Some things didn't even exist. How do you do that inflation? And you're looking at inflation over time. And then there's the substitution effect. So coffee prices go up, so people buy more tea, or banana prices go up, so they buy oranges instead. How do you adjust for that? So every CPI number does a different thing, and you can get all these different numbers. So you do need to understand that. You can look up the Fisher effect if you want to and figure that out. So, all right, then currency management. I don't think we have any international business majors in here. What is international business? It's business with currencies, essentially. It's business with currencies and government policy. So you spend a lot of time talking about currencies. So if you're an international student, and are there any international business students in here? Are you gonna have a class that's only about currencies in your career? So yeah, so to me, if you're an international business major, you would want a class just on currencies. So if you're interested in international business, you better learn currencies. How do you learn currencies? Well, you take a lot of economics class, because what are currencies? Relative interest rates, relative inflation, government policy, deficits, government deficits, trade deficits. It's all economics. The currency trader I hired at UTSA, he had a PhD in economics. He wasn't a finance person. He was an economic. Even though he's trading bonds, he was trading bonds and other currencies. So he had an economics degree. I hate currencies. I can't figure out currencies. I was responsible for UTSA's currency risk. I was like, why'd y'all give this to me? I can't handle currencies. I had to set it up in Excel so I couldn't make mistakes. And we only had to deal with three currencies, the dollar, the pound, and the euro. We only had three currencies, and I still couldn't figure it out. I think that, I don't know if I told y'all the story, in Germany, I needed a sweater. And back when they had the Deutsche, and I thought the sweater was $60, and I get home and it was $500 because I divided when I was supposed to multiply. I was wondering why the lady selling it was so happy to sell me that sweater, $500 sweater. But I'm horrible at currencies, and yet they gave me the currency risk at UTSA. Currencies are zero-sum games. If you buy the yen, you're either going to win or going to lose, and whoever sold you the yen, they're either going to win or going to lose. There's, it's a trade. Why is the yen doing so badly right now? That's important to ask that type of question. If you're going to do international business and you're dealing with Japan, where is the yen? I thought, oh, there it is, right there. So that's pretty scary, isn't it? Any of y'all want to go to Japan for vacation? This is the time to do it. Everything would be really cheap. Your hotels would look like their own savings for 30, 40%. But the bigger question for you, if you're international business, is why did the yen do that? What's going on in Japan that's causing the yen to do that? Is it because their inflation is really, really, well, if inflation was low, the yen should be stronger. Their interest rates are really, really low. Now, what's going on? You'd have to read that. So you could certainly Google it. Why is the yen so weak? And there's some people are going to tell you why that is. But if you're international business and you're dealing with yen and euros and the pound, you remember when the Brexit vote, what did the pound do? It fell dramatically. So that's the kind of thing you want to look at. But inflation is part of it. If inflation takes off in one country but not another country, the country with inflation, their currency is going to fall. If the Federal Reserve raises the rates in the US, the dollar is going to strengthen. If we have big deficits like we do in the US, that's going to weaken the dollar. So recently the dollar has been doing pretty well. So international business really is, I think, understanding government policy, but then understanding currencies as well. So, so I won't go through all that. The accountants have made it so ridiculously complicated. Some of you accountants, if y'all get up in the powerful places, y'all need to just trash the FASBs on currencies because it's such a mess. It's so complicated. But what the accountants say is there's a transaction currency exposure and there's a translation. Transaction is you're buying and selling in different currencies. Translation is you own an asset, you got to revalue it in the other currency. And they have different rules for those, and it's just horrible. And then international business, if you're doing that, you have currency risk, political risk. Several years ago, Walmart got in a lot of trouble for bribing government officials in Mexico. Their argument was there was their only choice. That's the only way to do business in some places, but they still got into a lot of trouble. The stock market beat their stock up for like 3 days and then didn't care anymore, and the stock came right back up. So the stock market says, yeah, that's bad, but really not that bad. So they ignored it. Expropriation of assets. Certain countries have just taken assets away from companies and just said, hey, you no longer have this asset. Your inability to take earnings out of a country. Law changes, tax changes. I don't know why I have France in there at all. I don't know what happened there. Government controls on prices, on wages. People ask the question, why aren't there any Googles, Facebooks, Amazons, Microsofts in Europe? Why are all the big companies in Europe like 50, 100 years old? Most people think it's their hiring practices. What you'll notice in Europe, once you hit 50 employees, it becomes really horrible to have employees. You have all these rules, you can't fire them, you can't do anything about it. So what you notice in Europe, you have all these companies with 49 employees and they just stop at 49 and it's just crushing them. Can they do anything to fix that? I don't know. I deal in Costa Rica and the government policies there are just horrendous. It's horrible to start a business in Costa Rica. They make it so ridiculous. Like we started our restaurant and it's ridiculous the red tape we have to go through. So yeah, that's a big deal in a lot of countries. If I were your age and I were bilingual and I knew a really good language, I might start my career in another country, learn that country, learn the language, obviously. I don't know where the biggest places are. People were talking about Africa a few years ago. They've had some political issues that have really made that not as big of a story as they thought. Asia was a big story with the Asian tigers. Obviously, China is still a big story. South America is kind of like great for 5 years and then horrible for 5 years because these political swings are just so extreme. But I do think being a global person probably makes some sense. So I know several of y'all probably have language skills. I wish I'm horrible at languages. I've been studying Spanish for, I'm embarrassed to say, for 15 years. And my Spanish is so horrendously bad. It's just, I go to Costa Rica and they send me off by myself. And it's so pathetic. One guy, he said, Ron, come tomorrow for breakfast. My wife's making this huge breakfast. And I'm like, yeah. I had no idea what he's talking about. And the next day he's like, where were you? We went through all this trouble making breakfast. Like, I felt horrible. But I understood some of what he said. I just didn't understand that part of the conversation. So language skills are huge. Knowing a country, knowing how to operate, that's huge. So, take advantage of that. Even in the US, here locally, Oracle was hiring bilingual people. Anybody could speak Spanish because they're expanding in South America. And boy, we had several of my students that were bilingual. They got hired in a nanosecond because they had those language skills. So language skills are huge. Ownership. Here's how you might, if you want to go work overseas, here's how you might do it. There's an index called the Ease of Doing Business. I think they've shut it down. They may not do it anymore. The World Bank does it. So you may have to go back several years. I don't know why they stopped doing it. I think part of it was Putin. Putin said, how do we move up on that ranking? And he started doing this artificial stuff to get him higher on the ranking, which wasn't really legitimate. And it was like, okay, people are gaming the system. But there are those kind of indices, ease of doing business. What I find interesting in those is what they actually score. Like how easy it to open a new business. How easy to do payroll? What are the rules for bankruptcy? What are the rules for, I don't know, transferring money? So those are important. So what do you have to do to be able to start a new business? What are the cultural issues that you're going to be handling? So I remember it's pretty funny looking at Walmart trying to open in Germany. And something as simple as having a greeter at the doors, they said, we don't like that. Just leave us alone. We want to shop. And they should have kind of tested that a little bit better. McDonald's in UK, for some reason, it didn't work. I don't know why people in UK don't like Big Macs, but it just didn't work. Worked well in Russia, right? They opened a McDonald's in Russia and there's a line around the block, maybe not today, but back then. Those are things you got to figure out when you go overseas and try to test the waters. Walmart has done great in Central and South America, maybe too much, where they're just taking over the entire country. I was in a store in Costa Rica. I forget what it was called, but I thought, oh, it was one of these local stores. I'll walk in, there's a sign, and sure enough, it was owned by Walmart. It's like, oh man, Walmart owns everything. So you might start with a partnership first, learn from somebody else. That's what a lot of people like to do in India and China, so that you don't have to deal with all those regulations. The problem in China, if you do that, or India, they may end up say, partner with us. They learn all of your secrets and then they kick you out and they got all your secrets. So you have to watch out for that. But yeah, if I were your age, I think I might do something radical. I might go work in Botswana and start a business and learn the whole area. And, Botswana is kind of a well-functioning African country. I don't know. Y'all have the guts to do something like that? Or is that just too scary? If your actuary major might not make sense, but I don't know. If you have language skills, can you tap into them and use them? I think right now the world's looking for the people that are global that can handle that. All right, one last thing I want to do is this class, just real quick. We started off with the intro. Risk versus reward. That's what finance is all about. What is your reward? How much risk are you taking? If you take other finance classes, they're going to spend most of the time measuring risk. Then we did financial analysis, and one of you is going to tell me the template. Someone give me the template. What was it? I'm going to do an analysis of Walmart. I'm going to start off by assessing Walmart's liquidity. Debts under solvency. Turnover. Okay, profitability. Capital, what comes before that? Charge $100, you have $80 in expenses. Margin. Liquidity, we looked at things like the net working capital requirement. Remember, that's the exact opposite of what the accountants teach you. Y'all still haven't set up a debate with me, one of the accounting professors. I'm still waiting for that. And they do ask for the current ratio on the fact exam. I should talk to Dr. Baynaut why he does that, because no one in finance uses that ratio. Solvency, we also talk about free cash flow. Are they paying dividends? Are they buying back your stock? Are they borrowing money? Solvency is debt. How much debt do you have and your credit ratings? Turnover, it's all about revenue growth. That's what Facebook is struggling with right now with the number of users, or Netflix probably even more so. Margin, it's revenue minus expenses. You've got the gross and the net margin and the return on capital. Then we got into cost of capital, EVA. So very, very important concepts there that you did on your exercises. We talked some on risk and value at risk. I'm not a big value at risk. Valuation. So we've covered all the big stuff. If you take, Dr. Lowe has his MIT graduate class. If you go and sit in that class, he doesn't cover anything we haven't covered here. I left one big one out, sorry. CBAs, cost benefit analysis, that's a pretty huge one. So it's an undergraduate course, but we've covered everything they cover in the graduate course for non-finance majors. So we haven't watered it down. The big question is, how much of this will you remember in July? And if it's 0 and we just wasted our time, that's terrible. So find some way to keep this in your mind. Part of it's going to be repetition. So if you take corporate finance, those that are finance majors, you're going to see a lot of this again. If you take my investment class, you're going to see a lot of this again. So if you're a finance major, well, some of y'all, this is the last finance class you'll take in your entire life. Is that true? How many of y'all will never take another finance class the rest of your life? Okay, so that's kind of sad if you forget everything we talked about. Do you need finance in your career? I can't think of any career in business that doesn't need finance, because every major business decision is driven by finance. If you're a marketing major, you won't have a new marketing campaign. Finance is going to decide whether you get to do that campaign or not. If you're cybersecurity, you want to buy some new program or something, finance is going to decide whether you can do that. So you need to do this and know it. So don't forget all of this. It is important stuff. And then the last thing I'll tell you, you may never see me again, but I'm your professor for life. So anytime you have a question, 6 years from now, 20 years from now, I've had students send me their Excel. They're trying to do a cost benefit and they couldn't get it to work. 7 years after they graduated, I had one lady from an EMBA have me come talk to her board about investing. I have one student who failed my class who's texting me constantly for investment advice. And I'm like, sure, why not? So, you know, take advantage of professors. This is part of your network. I'm now part of your network. You might thought I was the worst professor you had, but that doesn't matter. You can still come to me. You don't have to tell me how much you hated my class. Still come to me and say, hey, I got this 401k plan and I don't have a clue what they're asking me. I won't give you investment advice, but I'll definitely, what I always tell people, if you tell me what you're doing, I'll tell you if you're about to make the worst mistake in your life. I will do that. If you're about to buy an equity-linked annuity, I will tell you, yeah, don't do that. That's a really stupid thing to do. All right, so that's it for me. Any final questions? Everybody understands the exam on Thursday, what we're going to do? So we'll probably like have half the class do the 2 Excel, while the other classes working the other problems, and then we'll switch it so that we can make sure you only have the Excel open. Y'all know what's on the exam. Anyone here not know what's on the exam? Everybody knows. Okay, so I've had students walk in and say, what's this first question mean? It's like, where have you been? That's not an issue in honors classes, but I've had that in other classes. All right, so that's it.